Good evening, and welcome to the Brief Post. Tonight we bring you a major development in the world of technology and geopolitics. TikTok has signed a deal to sell its U.S. operations to a group of American investors, a move that could finally settle years of legal uncertainty over the popular social media platform's future here in the United States. According to internal memos and reporting from multiple outlets, TikTok and its Chinese parent company ByteDance have signed binding agreements with three major investors, Oracle, Silver Lake, and Emirati investment firm MGX, to form a new U.S. joint venture. Under the terms of the deal, half of the new entity will be owned by these investors, with each holding roughly 15% each, while ByteDance retains a 19.9% stake, and about 30.1% will go to affiliates of existing ByteDance investors. The transaction is expected to close by January 22, 2026, according to a memo shared with employees. This deal comes after years of political pressure and regulatory scrutiny. U.S. lawmakers passed a law in 2024 mandating that TikTok either sever foreign control or be effectively banned from operating in the United States, a law signed by President Joe Biden and upheld by the Supreme Court earlier this year. At several points this year, TikTok's future here appeared in jeopardy. The platform briefly went offline earlier in 2025 as deadlines loomed, and the enforcement of the divest or ban law had already been delayed multiple times through a series of executive orders. A central concern throughout these negotiations has been national security and data privacy. To address these worries, the U.S. venture will be governed by a majority American board of directors, and user data for Americans will be stored locally and managed by Oracle. Perhaps most importantly, TikTok's content recommendation algorithm, often described as the app's secret sauce, will be retrained using U.S. user data to reduce the risk of influence or manipulation from foreign actors. These provisions are designed to satisfy lawmakers who argued that China's legal environment could allow the Chinese government to compel ByteDance to influence U.S. users through the app. This saga has spanned multiple presidential administrations. Initially, former President Donald Trump attempted to ban the app in 2020 over national security concerns. In 2025, as deadlines approached, Trump issued a series of executive orders to delay enforcement while a divestiture deal was negotiated. Meanwhile, Congress passed legislation with broad bipartisan support aimed at protecting Americans' digital data and reducing foreign influence in critical tech infrastructure. AP News. In the tech world, reactions to the news have been mixed. Some analysts see the deal as a lifeline that preserves TikTok's massive user base in the United States, which today exceeds 170 million Americans. Others have pointed out that while the company will now operate under American-led management, ByteDance's retained stake means the Chinese company will still benefit financially from the platform's success, a nuance that critics say may limit the deal's impact on national security concerns. Investors have already responded. Oracle's stock price rose notably following the announcement, reflecting optimism about its new role hosting data and overseeing parts of the platform's transition. For TikTok's vast community of creators and users, especially younger Americans who rely on the platform for entertainment, information, and livelihood, this outcome means continuity. The shutdown or ban that once seemed imminent may now be averted, giving creators and businesses confidence that the app will remain a stable part of the social media landscape. Still, the technical and operational shifts required, especially regarding the algorithm and data storage, mean that changes could roll out in the months ahead as the transition to the new joint venture takes shape. Looking forward, analysts say the key milestones to watch will be regulatory approvals from both U.S. and Chinese authorities, the official closing of the sale on January 22, 2026, implementation of the U.S.-focused algorithm and data protections. All of these will determine whether this deal truly satisfies lawmakers' national security concerns and whether TikTok can serve U.S. users without legal threats in the future. We'll continue to update you with verified reporting as this story develops. If you value clear, concise coverage of major technology and policy news, be sure to subscribe to The Brief Post. Thanks for watching, and we'll see you in the next update.